How are we doing, guys? I'll just wait a minute to see if anybody else wants to come on. Sorry I'm late. I was just thinking, it's rather me going over the same thing all the time. Is there anything that anybody wants to cover, or any pairs that you want to look at, or we can even share your screen and you can say what you're looking at and stuff. Feel free to mute yourself or put it in the chat, guys. I think Sean's been starting to do it, just letting people share their screens, and I think you learn more that way, seeing it on your computer, what you're looking at, your analysis. More chat. Yeah, you can see there's what for the 2936 rules I've got. Is there anything in particular you want me to go heavy in on? I don't know, some of you may not know. I'm in the process of making literally a video by video, sort of kind of step by step, or explaining what IPA is in detail, explaining what institutional candle is, what is smart money, internal liquidity, internal highs, lows, a bit of Wyckoff, so ST and phase B, liquidity grab, all that stuff. It's 6, 7, 8 minute videos, each sort of topic, and then obviously it's hopefully the jigsaw will start to make sense for you guys. That will, at the moment, I've been really busy last 2 or 3 days, so realistically it'll be end of this week, which will be the best time to finish it. But yeah, I can go over some stuff that I'm looking for tomorrow, or like I say, put something in the chat. Literally, if you want to look at a pair, any pair that you're looking at, just type it in the chat. So anything else, if you're struggling with anything, literally anything at all, this is what these sessions are for. If I don't know the answer, because I'm not a professional trader, I will do my best to find out for you. So we can start with, do any of you trade US 30 or gold? Just put it in the chat, yes or no. So it's, I can cover it anyway because it's exactly the same concept as Forex. I only ask because I'm not sure what you guys are trading with. You need a full lot size to trade it. Yeah, so Matt trades gold. This was one trade. I'll start with US 30. So I've got 4 pairs I'm looking at for tomorrow. So like I said last week, I don't trade a Monday or a Friday. So it's pretty much Tuesday, Wednesday, and Thursday, hence why I do sessions on a Monday. And if people want to watch them back, hopefully before the market does its Tuesday weekly cycle of the low or a high. Like here, you can see last week, Tuesday, that was a low, and then that's your anchor point. So we'll do that to start with. Make this bigger so you can see it. So I said last week, this did make a big difference to my trading, just to understand what the market is trying to do. So Sundays, which obviously yesterday, mark out your charts, what could be looking at, what we are looking at, what the potential moves are, identifying caps and price of action, point of interest, sorry. So such as IPAs and all that stuff, and lows and highs. And then Monday, you typically get a retrace or a rebalance of last week's price action. So let's see what we did today. So this was all last week. So if we go, where are we? Monday, from there to Friday, that was obviously last week. Yeah, in that yellow box, basically. Monday, see the Monday at the bottom. Friday. If you want that indicated, by the way, it is called FXN week and day separator. So yeah, obviously on a Monday, it's done exactly what it should do. So this is a cycle. This is very, very good to follow. The market does it every week. So on a Monday, it's retraced, basically pulling back to fill in this price action. So obviously last week we had, obviously that was our low of the Tuesday. The Monday, that it just doesn't do much. I'm sure you all know by now. It just, after the weekend, the dust settles. It hasn't moved much at all, really. I won't trade that. And then you get your anchor point, that's your Tuesday low. As you can see there, Tuesday, it's done its low and then work off that. Yeah, so that's all last week. That was Friday, obviously it's closed. And then Monday's been, which obviously today, we're pretty much nearly into Tuesday now. Yeah, so it's retraced last week's price action. Yeah, so obviously last week is all in the yellow box on the left, and all that price action down here now. That's not in the yellow box. It's obviously Monday that's retraced last week. Yeah, so it happens, I would say 9 times out of 10 on every trade, I would say. Obviously now we've just literally broken structure in the last, what's this, hour, 1 hour? Yeah, the last sort of hour is broken structure. So we could be looking at a Tuesday high. I don't know, possibly until it happens. When do I identify that? I would say around 11 a.m. or 12 p.m. noon tomorrow. But yeah, we're obviously looking at for it to come back down to here, which it did do. That was today. I'm really, really kicking myself because I didn't take this trade. I should have, and I thought, nah, do you know what? Stick to the rules. I don't trade the Monday. So that was let me delete this yellow box. That was your last down before the up move. Yeah, so came back into there perfectly. So I started on the 4 hour. Yeah, so let's finish this cycle first, sorry. Yeah, so like I say, the Tuesday we get our low or the high. Wednesday we get a reversal of price action. So we go back to the 1 hour. This indicator, by the way, only works on a 1 hour time frame. So we got Monday, Tuesday. Yeah, so we got that's your Monday in there. Yeah, that's your low. Tuesday, what do we get then? Wednesday is a midweek reversal. So obviously here it's pushing down. What's a reversal? Obviously opposite way. Yeah, we get that on the Wednesday. And then Thursday, we push into the weekly trend objective. What is the banks trying to do? Yeah, what is the overall objective that they're trying to do? What is their aim? What is their goal? Pretty much all they're trying to do is just search and destroy, really. Yeah. Number, what we got, number 21. Yeah, search and destroy stop losses and orders. That's all their jobs is, to take out liquidity, nice fuck you off the banks, and then run with the people's monies. Yeah, the retail traders, the Tom, Dick and Harry's that learned off YouTube, which is fine. Some people do well off support and resistance. Support and resistance works. But yeah, the overall, obviously the big fish is the banks. So what we've got then Thursday, yeah, the objective, and then Friday we typically get a pullback, 20 to 30% of the weekly move pullback. Yeah, so obviously it's slowed down. So you can see here in the grey in the bottom, Friday we got, was that Friday? And didn't actually do much of a pullback. Friday into Monday. Oh yeah, did a little bit of a pullback, but yeah, again, you're not going to get a perfect market every single time, but yeah, that's the idea. If you can try and follow that, then fantastic. So that helped me a lot. Also with entries, instead of, so basically, let's break this trade down here, this one here, or well, actually, I'll start with this one. This one, the sell. Let's move that. Let's move that. So obviously we were bullish here. Yeah, we were pushing upwards. And And then what we had was an ever so slightly break of structure. Yeah, in the wick, obviously, if you break that down to a smaller time frame, you will get a body in there somewhere, which is obviously closed below these bodies here. Therefore, that's a break of structure to the downside. Okay, so that is, to us, we know now that it wants to try and push downwards. Yeah, that's as simple as break of structure is, really. So I don't want to intimidate any of you. I don't know what sort of level you are, all are, guys, but yeah, we can see we've got upwards bullish momentum here, and like I say, it's just broken this low here. Yeah, so with this wick here, that wick pushed down and broke these bodies here. Yeah, so wicks are not my amazing go-to thing, but if it's breaker structure, it's still breaker structure. Like I say, on the small time frame, you will see a body in there somewhere on the 1 minute or the 3 minute probably. So yeah, that came back into here. So this green candle came back up into here and then obviously dropped. So what we did have was, this is literally as simple as, so the Wyckoff stuff, I don't know if you guys enjoy it or like it. I absolutely hate it. I understand it, but I don't use any of it really, other than ST and phase B, which is this. Yeah, it's just basically equal highs or equal lows with liquidity sat there. And obviously this is our spring. Yes, taken out all that liquidity. That's your FU candle, the liquidity grab. And then obviously we can see there, so that was your first step, equal highs broken. Yeah. And then obviously steps number 2 basically is the liquidity wipe. And then we've got breaker structure. So you look at number 7 in my entry requirements, liquidity wipe, breaker structure. It comes back. Does it come back? Yes. Where does it come back into? Into this up before the down. Yeah. So this stuff, you know, you don't worry too much about getting this stuff, because you got to be quite quick to. Not saying that any of you are slow, but if you miss it, there's always another chance that you can. You know, it's going to come back up again. You know, and there's a very good chance if it does that very quickly, it will come back up to another stage. This obviously didn't work that time, but there's always a very, very good chance it will come back up again and then drop. And then what it does in that meantime is creates more equal highs basically to be taken out at a later stage. But yeah, it came, obviously this was our last up here before the down, broke a structure. Yeah, and what it did do in the process was what? Look at that, perfect to that line to that line. See it? Wick. What is that? What's it doing? The banks have literally broken structure in one, so it's killing two birds with one. What's the object? 2 birds with 1 stone in it. Yeah, so it's done that. It's taken out liquidity. It's created more liquidity. So there's obviously stop losses below here, right? These candles. So the stop losses below there. So it's taken liquidity out. It's created new equal lows, liquidity, more equal liquidity, and it's broken structure all in one candle basically. Yeah, it's come back up to mitigate out of here, and then we dropped. I got into this one. Yeah, it dropped down. I took it down to here. Why there? I think, was it on the 4 hour? No, 30 minutes maybe. Yeah, 30 minutes. So this was last down candle before the up move. That I can see that broke structure. So number 3, what candle is causing trouble? So obviously this was pushing down, and obviously now it's gone obviously the opposite way. So who caused the trouble? Who's the bad boy? This candle here, that one there, was the last down before that big move. Did that move break structure? Yeah, so there you go, number 13. Does the particular move break market structure? Yeah, it did. Yeah, so this was our high here. Yeah, see our high here? You take your line across that body, just the end of that body, and that obviously definitely that body broke structure, therefore trying to push up. So it's just a game of literally fitting it in. You don't have to do this in these sort of time frames because this is quite tight, but it's exactly the same concept on I don't know what you trade daily or the 4 hour. If you're not overly confident, just stick to the higher time frames, most definitely. I tend to get boggled down very, very much with the small time frames. Try and trade them, it's quite hard. So yeah, we took it down to there. We had IPA to fill, obviously great. And then we've got our last down before the up candle. Yeah, so I took to hit TP there. Yeah, so then it's done all this. Yeah, it's broke. I could have carried it along, but didn't want to be greedy. So we got down to here. Why here? Because let's go on the 1 hour. Yeah, so we did have ever so slightly bit of like imbalance from that wick there to there to be filled, and also from there to there to be filled. Obviously, bear in mind that none of this was there, was it, beforehand? So that needed to come down to be filled. Yeah, and I did look at that, but what it did do was create liquidity again. Yeah. Was that the candle that caused trouble? No. Where did the move start from? Was it that one or this one? This one was the instigator. This is the bad boy. Yeah, that was the last down before the up move. It wasn't this one. That's it's not doing much really. It's just sat there. Yeah, so that was the last down before the up move. Yeah, so that was the 1 hour. Drop it down to 30 minutes. And just see if you can get a tighter stop loss. Because if we looked at the 1 hour, if we moved our top of the body, yeah, so if we looked at the last down before the up, then we marked it out from there, stop loss below that wick. Yeah, so this would work out at the moment. Let's take it back here up to these highs. So that would work out as a 6.7 to 1. Okay, so if we now chopped it down, this is the only sort of time I like to go down to smaller time frames, is to get a better entry. Now where's the bad boy? Yeah, this is your last down move that caused all this. That's also the last down move before break of structure. Where did it break structure? Here. Yeah, so it's broken these highs here, therefore meaning we're trying to push upwards, which obviously it did do. Yeah, but it needs to come back to here to obviously mitigate out of price action. Now let's move our entry. Don't get me wrong, sometimes you can go off the 1 hour, sometimes you can go off the anything really. You just got to play it by ear really, and sometimes I've missed trades and they've gone. It's just sort of tough. They've gone, unfortunately. So this now goes from a 6.7 risk to reward to now we're playing with a nearly 12 to 1. So if you don't know your risk to reward yet, you're basically willing to lose £1 but to gain £12 back in return. Yeah, and obviously this is why the Forex stuff is great. You can lose 11 times basically. If your 12th one comes in, you kind of break even. Yeah, so that's great. And yeah, like I said, unfortunately, I absolutely missed it. Yeah, pin perfect pretty much. Yeah, you can see the black line. That was the move. Yeah, I was quite wary of the IPA below down here as well. Yeah, then it needed to be filled. There's more down here, but where do you stop? There's no point going left and left. You could say, oh yeah, down there back 6 months ago. We just got to sort of trade what we see in front of you, yeah, and just go off that. And if it doesn't work out, it doesn't work out. It's this going back to risk management. If that didn't work out, what we lost 1% or 2%. Yeah, I don't know what you're risking. So if we lose 1% here, and it came down to, let's say, don't know where's the next one. Let's just say around there. It looks like around there. Yeah, stop loss down there. If anything, what we've got now is a better risk to reward, because now it's turned into a 13 risk to reward, 13 to 1. Yeah, obviously minus our 1% that we lost here. So it's now you're still up 12% if that came in. Obviously it's rejected off here at the moment. But yeah, I missed that unfortunately, which is what it is. It's happened, it's gone. If anything, what it does is just give me a boost of confidence knowing my analysis was good. Yeah, so obviously it's trying to pull back now. But yeah, I won't get into anything. Most definitely not. I only trade between like 7 a.m. and 4 p.m. really. Anything after that. But yeah, chop down different time frames. So like on 30-minute, you can see here we've got a massive candle. What's in that candle? Yeah, so let's go down to 15. There you go. We've got a nice little candle now. So let's do this one. Make them down to here. Reject off there. Wick below there. We could be looking at this tomorrow. So this could possibly be our Tuesday low. If it comes down to there and then pushes back up. Yeah, can we get as tight to stop loss? Yeah, we've got another one here. We'll mark that out. That's the last down. Okay, so let's move our stop loss. Now what we're playing with? A 12 to 1. Yeah, can we get any tighter? I wouldn't recommend this unless you're quite confident. But it's just showing you the risk to reward. Yeah, I wouldn't really move that. I'm happy to leave it where it's at. You know, how do you, it's just greed basically. Yeah, how greedy do you want to be? And it's bit me in the ass before where I've moved my risk to reward stop loss and it's rejected it off, like let's say up here off the 1 hour. My entry was down here. It's gone 2, 3, 4, 500 pips. I've missed that move. So you know, but you also got to. It's a bit like going into in a business meeting. You got to know where you want to enter, what price you want, and you know if you want to enter off that price, don't move. You know, because there is still imbalance up here to be filled. So it's just a game of probability. Remember, yeah, it's what is the probability of price coming down to here, into here, to mitigate and push up. Well, always with IPA, it's protecting a last down or last up, institution candle basically, yeah, an IC candle. Yeah, so always with IPA or equal highs. They're equal highs or equal lows. They're protecting usually a candle. Okay, that's US 30. Unless you've got any questions, I'll go on to gold. Gold. Remember, don't be put off by these indices, yeah, the gold and US 30, because the concept is exactly the same on Forex stuff. Okay, so we got a massive drop down last week. Yeah, again, what did it do? It created liquidity like that, perfect. Yeah, more liquidity. Why? Because it needs to be taken out further down the line. When? It could be next week, it could be next year. Yeah, we really don't know. We just got to, again, trade what we see in front of us, pretty much around this price. Yeah, that could be a point of interest for, you know, if this trade comes in, I could take it even further down with a trailing stop loss. So yeah, 4 hour, not much going on here, really. 2 hour, drop it down, still nothing. Yeah, we're looking for obviously a last up candle. Now we've got one. Yeah, a 1 hour candle. Yeah, see this one here, the hollow one, well, last up for the down move. Okay, and it's obviously broken all this structure here. Yeah, there's a lot of liquidity sat there. It's 1, 2, 3, 4, about 4, 5 spots there. There's major liquidity sat there. So obviously it's literally strike right through it. That fast is obviously left IPA behind, and it's just literally filled in tonight, like well today, yeah. Yeah, so that was NFP, yeah, the big drop. But I don't usually follow or trade news. Some people may do. I think that if the banks want it down there, they will do everything and they will get it down there and just blame it on NFP. That's the only day I don't trade as NFP. But yeah, news, I'm aware of it, you know, but if price wants to get back up to there, the banks will get it up there. Yeah, so this obviously IPA, we're looking to get back up to here. That was, see this first one, that's a 14 to 1. Yeah, risk to reward. Back down to here, off the 1 hour. Can we get it tighter? Yeah, so let's drop it down to the 30-minute. Is anything tighter? Yeah, we can see a little green candle in here somewhere. Yeah, down there. Yeah, that's see the red line. That's a tiny little noggin candle body, but it still lasts up. That is the bad boy that last went up and then down, because what was before it? What's here? Equal highs. Liquidity sat there. Happens all over the place. Yeah, equal highs, ST and phase B, liquidity grab, yeah, part of Wyckoff and then dropped, broke structure. Okay, so it needs to come back. If you don't know, and if you're not sure what I'm talking about, I will show you. Wyckoff. This literally fries my head. Yeah. So where are we? Yeah, so you pretty much got part 2. Yeah, it's opposite way around, isn't it? For for a sell. It's Utah didn't it up to this, but yeah, it's I just go for this one. So yeah, you see your SC there. Yeah, so you see that black line, that is your liquidity sat there basically, or more liquidity sat in ST and phase B. Yeah, so that's your lows or your highs. Yeah, and then you got your spring, you test, and away it goes. So just remember that, flip it basically. Yeah, so what do we have here? ST and phase B. Actually, I will flip it for you, a bit scale. Okay, so what we've got, lows. What's here? Lows. Yeah, what does the spring do? The spring, what's that there? Liquidity grab, that's your spring. And somewhere in there on a smaller time frame, there's a test of this market, of that area again, of that price, of that level. And obviously it shot up massively. Yeah, so as you're saying with sells or buys, pretty much. I understand more the buys and the sells. Okay, so obviously price has been left in there. Yeah, so the banks have left price in that, money in there. Yeah, because obviously they pushed up. Obviously they got a buy on. Yeah. It's a bit like us going overdrawn in the bank, isn't it? Yeah, obviously here we're good. We're our heads above the water, buy, and then all of a sudden we just spent fucking 20 grand on a credit card. We're in the debt. Yeah, we need to come back up, which is what the banks are doing. Yeah, obviously slowly, surely the bank's coming back up to break even out of this position. Yeah, I'm sure you all understand what mitigation is. That's that entry. That's off the 1 hour, but that's now off the 30 minutes. The red one. Yeah, this is a 14 to 1. What's this one? A 44 risk to reward. So if you're risking £10, you're basically going to get £440 back. Yeah, if you're risking 100, you're going to get 4,400 potential. Yeah, I'm not saying you will do, but that is also if it happens, because obviously the other chance that could happen is push up to here, come back down to here, because what's here? Yeah, there's IPA in here, imbalances in here. We've got this last little noggin here. Yeah, that is the last. They tell you to go off the last up, well, the last down. That is the last down before the up move. What did that do? It broke structure. Therefore, that is the last candle. So in theory, we should be concentrating on this little candle here. Yeah. So if it pushes up tomorrow, that is going to be our what? What's our weekly cycle? Down here. Daily rules. Okay. Yeah. So Tuesday. What? Oh my God. What do we have on a Tuesday? Weekly high or weekly low? Yeah, Tuesday we should see a high or low of the week to play off as an anchor. So hopefully I'm looking for weekly high or low into here. So Tuesday, obviously tomorrow. Yeah, tonight I'll just hover around here probably. And hopefully we'll get a Tuesday high either here or here. Yeah, so how I sort of identify beforehand, I used to just wait for price to do this, literally like that, bang. I used to get in, I used to do this, and then back up to the proper price where it wanted to go. So therefore now I will wait until a bowl is shaped, as in literally a dish your missus has got in the kitchen, a bowl. Yeah, so it's just basically accumulation or distribution. Okay, so I'll try and find an example for you. Yeah, if we're taking that down to there, and then that is quite a tight stop loss. So if we're taking it then back up for buys into here, this is the IPA on a 4 hour. Yeah, so that's going to be a fantastic trade to take. If we got that, that would be 28 to 1 is to reward. You're risking £1 to get the potential of £28 back. Yeah, why up here? Because that is, I think, on the 4 hour. Yeah, major IPA on the 4 hour. Yeah, that needs to be filled. What is here? What's sat here? Liquidity, highs. Yeah, there's a lot of money. The stop losses are there. The banks literally know that. Yeah, I don't know whether you know, but Barclays got fined, I think it's like £1.8 billion pretty much every year because they got a software that tells them exactly where retail traders' stop losses are sat. It's illegal, but they make that sort of money in 2 or 3 days, so it's worth them paying 1.8 to even £5 billion a year. They really don't care. Yeah, there's an article about it somewhere. So if we get that, if not, you know, how I would do that is if I was going to take a trade from here down to the sell, down to here, it's just have your stop loss quite tight behind it. If it breaks through, fantastic, carry it going. Yeah, maybe this one around this area, if it carries on going, great. Yeah, or twin trade. Don't know what your risk is, guys, but I will put 1% on this one, 1% on this one. I will, if I'm confident it's going to start reversing here, I will close a full order here. So let's say I'm at 400 quid here off one trade, and this one's obviously on 400 quid as well. I will move my stop loss deep into stop profit. So if it does bounce off there, it's going to go up that way. It's going to hit my stop profit, and maybe I take 250 quid off. So I've done 400 quid here and 250 off this one. Yeah, so you just got to protect yourself. It's a bit like somebody said to me once, where's your insurance? You've always got to get insurance. So you just have to have covering your ass, basically. Just make sure you got your insurance on trading. So where do you want to take it to? Yeah, where's the money? So if we were taking it back up to there, like I say, we can take a trade from here if it rejects in the way we want it to. Yeah, and then let me show you maybe the bull system. And down there, mitigates. Yeah, we can go off this one. So that was the last up for the down move. Obviously broke structure, clearly broke massive structure down to there. Come back up to mitigate. Okay, so this is now on the 4 hour, remember. So let's break down what's in here. Let's change this color so we don't lose it. Yeah, so chop it down to the 1 hour. What's in there? Just keep on chopping it down. Yeah, time frames, different time frames. Chop it down to the 30 minutes. What date is that even? Oh, don't say one. Let me go back that far. Let's see. Date is that 6th of January. 6th January, 1 o'clock. Still no sort of ball shape. Let's drop it down to 15 minutes. Come on. Won't let me go back, for Christ's sake. Let's find another one. Euro USD maybe. Let's reset this chart. Let's fall down. Go structure. Yeah, let's go with this one. Okay, so this candle in here, or even this one. So this one could be one trade. This is actually a perfect example of showing you stacking orders. So here, that's the last up before down, into there, drops. Last up before down, drops, back into there, mitigates out. Yeah, so 1 trade, 2 trades, 3 trades. And remember to take profit on the way down. Only do this if you're very, very confident in your own analysis and in general. So you could have got 1, 2, 3, 4, 5, 6, 7 potential trades from here because it's just dropped, broke structure, come back. Yeah, so if you're not sure where I'm talking about, this is your up, fall down, come back in, dropped. Yeah, up, down, broke structure, broke these, broke structure, come back up to mitigate out, dropped. Sell from here, sell from here, sell from here. Same here. Let's come back up. Yeah, that's your last up. For the down move, what did this do here? This candle here broke structure, clearly heavily pushing downwards. Yeah, so this is called stacking. Yeah, come back up, mitigate twice, 3 times. So you could have got them trades basically. If you're going to do it, please be careful with it. You know, don't use massive risk and take profit along the way. So if it drops down to there and come back up to there, down there, maybe take like 80% of this original trade from there, yeah, and then leave the other 20% to run. Make sure you obviously put it into stop profit, not break even, because we all know how the markets can literally just shoot back up to here, and you've lost all like 5, 6, 7 trades. Yeah, I don't encourage it, but it's an option for you if you want to do it. Yeah. So yeah, what we're talking about the bowl shape. So 3 minutes. I'll get this away. Yeah, that's kind of, yeah. So if you're again not confident, which I used to, when I say I'm not, when I say not confident, I'm not trying to knock you. Maybe just, I know a lot of people try and get into certain places and it's kind of the wrong place and it's just shot through. Yeah, so some people may well have just entered here. Obviously this time it worked, but could have come down, broke structure, and then shot through. So if like I say, if you're not overly confident in doing that, taking a trade from there, just wait. Yeah, because there's 9 times out of chance this pretty much came back into it. Not perfectly, but remember the wick is still valid as well. Yeah, that wick there is still part of that candle. Yeah, the body is the most important part. We know that, but the wick can still act as a move as well. Yeah, so it came down. It could have, not great, but yeah, what I was trying to explain to you was just bowl shaped. Yeah, the overall gist of it, obviously, then drops. You got another one. I'm not talking from here to mitigate and then drops. I'm talking when it mitigates from mitigation onwards. Okay, this is not really showing it that well, to be fair. Yeah, so that was, there you go, that's a bit better. So obviously that was your out the last up, fall down. Yeah, instead of taking this option, which is still fine, 100% you can take it if you want to. Yeah, what about waiting for that bowl shape, the distribution or accumulation? Yeah, and then enter. Because what you're doing is just making sure that these don't break above these bodies, these candles here. Because if it does, then your knacker is going to push through. Well, there's a very, very good chance it's going to push through. So it's pretty much dead on. But yeah, you can take them trades. Obviously, if it broken through all the way up to here, then it's clearly broken the structure. But on the flip side, this is on the 1 minute, so therefore this is equal internal high. Yeah, it's not our range. So this is something I used to struggle with massively. Yeah, where's the last high? Where do you go off? Yeah, so to me, this would be from there. If we were trading here, that's the most recent low. It's down there. Yeah, so from here down to this area here, this here, that is your range. Okay, so from high to low or low to high, that's your range that you need to find trades within. Okay, so this is not, I would say it's not a high. It is a high in theory, but it's an internal high. Okay, it's within your range. So I used to find when I was trying to enter here and it broke above this high, it's like, oh no, forget it, it's broken structure. It's not. It's still within our range that we like to trade with in this area, in this box, if you like. Yeah, so I've seen it before now. It's broken up to here. Obviously, it didn't want to play off that one. That one didn't come out to play today. Yeah, maybe it wants to come up to this one. Yeah, is it within our range? Yes, so therefore it's still valid. So if it wants to come up to there, great. And what it did do was it gave us a better price, basically. Yeah, because if you take your fib, I don't know how this will work from high to low. Yeah, so yeah, I wouldn't take a trade from there because it's 50%. You should never ever buy or sell less or below 50%. Yeah, if we all go to John Lewis for a microwave, I don't know why I think about microwave. Yeah, do we want 50% off, or do we want 71 or 78 or 89% off? That's why these are in golden. This is my golden pocket area. So working off fibs, would you rather 78% or 90% off your new Hugo Boss shirt in the January sale, or do you want 50% off? Again, it goes back to what I was saying earlier on. You need to understand and only agree going into that meeting what price you will do a deal on. Yeah, so this was the perfect example of me doing this. Yeah, just looking into here. All I was looking at, I was just concentrating into here, and I was actually losing a lot of trades. Yeah, so just because I was just concentrating on the smaller sort of nitty-gritty stuff in between. All it's just noise, basically. Yeah, all this stuff in between is just massive noise. Yeah, whereas obviously all the banks don't even trade these. Yeah, they trade the 4 hour, the daily, and the weekly. They've got absolutely no interest at all in the smaller time frames. Yeah, because they're moving billions. Yeah, so they're not going to get billions from there to there. They do that small move. Yeah, it's just not worth it for them. Yeah, they're the big sharks. They will do the big moves, and we just got to try and catch what they're doing. We'll never ever beat them. So we just got to try and understand what they're trying to do. So going back to the fibs, that's your range from high to low. Yeah, obviously this. Let me go to replay mode. That price was never there, was it? So from there to there. Some people do say if it goes to 38.2, it's showing signs of it's a very, very strong downward market. If you want to take that trade, it's up to you. I would most definitely not, because I'm only getting 38% off my new Nike Air trainers. Yeah, so I want 75, 80% off my Nike Air trainers. Did it get up to there? No, it didn't. So would I take the trade? No, just leave it. There's another literally 4, 5, 6, 700 trades out there in a 2, 3, 4, 5 weeks that we can all take. Yeah, patience is very, 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 very key. The price never came back up to there. Maybe it will do. Yeah, if you want to mark that out and leave it there, that's fine. Yeah, just bear in mind that's on 1 minute, but again, it works on every time frame. Okay, but yeah, 1 minute. I was just showing you the bolster, the bowl shaped stuff. So yeah, before entering, even on the 1 hour, just wait a little bit. Okay, so let's try and find something. Yeah, 10. I've got about 10 minutes left, guys. If you've got any questions. GJ, I think I was looking at. Try and break this down quickly for you. I think this is a perfect example of so low to high. Yeah, there you go. Where's the fib? Where's price? So let me delete this actually. So firstly, we're looking at this, right? It's a clearly broken structure from here. Yeah, broken these high, this high, this high, and then created equal liquidity highs, created equal highs in here to be taken out at further time. Yeah, so again, look what happened here. ST and phase B equal lows. What happened? Bang, fuck you. Liquidity grab, wipe off the banks. What's this? This is called a test. Retested that area. What was this? Last down before the up move. Did it break structure? Yes. Yeah, it happens everywhere. Okay, just keep on looking for this move. All you need is that shape. Again, what is this? What's that? Bull shape. Yeah, I know there's stuff shit in between, but you get the gist. And it's a sort of overall bend in the market. Yeah, as it did do that, it's obviously on a it's changing direction. Yeah, as soon as it breaks structure, it came back into where this little wick here, this candle came and tested where last down before the up move. Did that take out liquidity? Where's our rules? Number 12. Does the institutional candle move take out liquidity? Did that take out liquidity? Yes. They took out this liquidity here. Okay, so that is your going back to Wyckoff. I'll show you again. ST and phase B. Yeah, equal lows. Liquidity sat there. Spring is your liquidity grab. Your test is your candle. Okay, what was that? ST phase B, spring, test, away it goes. So you could have bought from here. It's literally just having the confidence for doing that. I was like, what? I can't do that. It's what if it comes back, it keeps on coming down. But you just got to literally go with you know what people sort of tell you. Not saying it's Holy Bible, but it works over. It's just an algorithm. Yeah, people work off an algorithm. That was all the banks are doing. Yeah, the markets like this have been sat like this for about 86 years, something like that. So it's just, it knows exactly what to do over and over and over and again. It's just a pattern, it's just a robot now. Create equal lows, liquidity sat there, takes it out, retests. Where do we enter? We enter here. What's that? Top of the body or 50% around that area. Yeah. If you want to be a very aggressive trader, put it underneath that specific candle. Yeah. If you want to be safe, put it, let me delete this for you, can't see it. Put it under this wick here if you want to be safe. So let's just be safe for now. Let's move that to the back. Where are we going? Can we go maybe that little tiny one there? That's a 2.3 to 1. Yeah, not fantastic. Yeah, can we go up to here? Yeah, of course we can. Yeah, do we get there? Yeah, got there. Yeah, or maybe these highs or this high. Yeah, I would have targeted there. Yeah, but firstly I would have gone in around this area. Yeah, then just if you got, remember I twin trade, so if you put 2 trades on, obviously please remember if you're risking 1%, put 0.5 and 0.5, split the risk. Yeah, don't go 1%, 1% or 2%, 2%. Yeah, risk management is very, very important. So now we've got a nearly 4.5 to 1 risk to reward. Yeah, so it's all about risk to reward. How many pips is that? 387 pip move. Yeah, if you're putting standard lot size on that, you're getting a good return. £3,870 basically off that trade alone. Okay, so that happens everywhere. Just master that. Yeah, go and look at it. Just literally go on Google Wyckoff. This is all this stuff. I know what it is, but it's just noise to me. Just forget it. Yeah, if you want to mark it out your chart, that's totally fine. I used to mark out my charts just to make sure it's all in the right place and stuff. Now I can just see it. Yeah, so ST phase B, spring test. That's what you look for. ST and phase B is your equal lows or highs, remember. So obviously works in the opposite way as well. Yeah, and the ball shape is great. Yeah, it takes out and then comes back in to that last down, the naughty boy candle. That was the last candle that created this move that broke structure. Therefore, there's money sat in that candle. Perfectly came back into it. If I'd have fucking traded that, I would have missed it probably. Yeah, that literally like to the T. It's insane what the banks do. Yeah, so let's put a fib on that. So where are we going from the high to the low? Sorry, that was our low to the most recent high here. Not great. Yeah, that sort of contradicts what I was saying earlier on. Don't buy or sell below 50%, but it's up to you. You know, I would have taken that trade. You know, because it just followed the rules. Fibs, I don't swear by them. You know, I just, if it lines up, great. But then obviously you could have caught that all that move, that massive move. Yeah, and you could have also stacked along the way. Yeah, so what we got could have last down. Yeah, so last down you could have got, if you missed that entry, you could have got this one. So this is here, last down before the up move. This could have got that one. You could have got that one in, came back into it. There's a slight little bit of drawdown and then pushed off. Last down for the up, nothing came back into that one. That's why it's just sat there. That's why you marked it out. What did it leave here? Imbalance, IPA. You know what IPA is, by the way, is improper price action. It's just a fancy word for imbalance that the educators use. So we've also got one here as well. That's the last down before the up move that broke structure. There's nothing so far that's come into it as of until about 4 hours ago. Yeah, what did this do? That came into there. Again, same move. Look, ST phase B created liquidity, broke spring. Sorry, yeah, came back into it. Test. This candle here came into where? That candle. Could have bought from there, or you got a second chance, third chance, four times you could have got into there. Buy. Yeah, stacking trades. Okay, so now this has come back into here. So now my fib will work. I know this because I tried it early on. So low to the high. What do we have? Where's that sat now? Perfectly at 50%. Do we like to buy stuff 50%? No. Yeah, I want 80, 90% off. Where does this sit? Look at that candle there. Where does that sit? Let me make it bigger for you. Might not see it. Last down candle, perfectly, 71%. Thanks very much. I've just earned another 21% discount off. Yeah, so where are we going to enter? Would you rather enter here or up here? What's the difference between there and there? 105, let's say 100 pips. Are you willing to lose basically 100 pips or gain 100 pips? So just be patient and wait a little bit longer just to get, it may take you 4 minutes, it may take you 4 days. Patience, patience, patience. You have to be patient. Shit, it's nearly 10 past. Yeah, so I'm just waiting now for this. I will most definitely not take this trade now. This may be, yeah, don't get me wrong, it may push up to maybe even here. That's last up before down. It may push up 50, 60 pips up to here, but I'm willing to sacrifice that to get this entry down around 71 mark. Let's put a stop loss below that wick to get that massive move up to our supply area. What's here? Last up before down move. What's here? IPA. What's here? Equal highs that need to be taken out. Liquidity sat there. There's more in here. Okay, so that is now a 17 to 1 trade. How many pips do we have now? Oh, come on. That's a 400 pip move now. Unless you've got any questions, guys, I'll have to cut it there. So hope that helps. This is recorded, so if anyone want to watch, it's back. Also, what we'll have tomorrow on a weekly cycle. What's Monday? What's Monday done today is rebalance last week's price action. What do we have tomorrow? Our low, hopefully, for the week. Wednesday, our midweek reversal. And Thursday, pushing to the weekly trend objective. Where does it need to get to? Yeah, it needs to get up to there. Why? Because the banks are sat up there. That's our supply area. We've got any one thing in the chat. Can't see it. Thanks, Jason. Great session. No worries, Matt. Thank you. I'll stop share. So yeah, thanks for jumping on, guys. Anything you need, feel free to message me, or if you've got any God, I'm tired. If you've got any charts, markups, I mean, I'm no Rock Kumar, but I'm more than happy to look over them if you want to send them in. But most of you send them into the chat anyway. But yeah, we'll speak to you soon, and have a fantastic week, guys. Cheers. Bye bye.